Hello, I'm Kevin Grimes, CEO and Chief Investment Officer here at Grimes and Company. I'm here with another installment of the Bitcoin Diaries. Lots to talk about this week. Today is February 6th after the close, and we're going to pick up where we left off last week. But before I do, a couple housekeeping items as always. Number one, please read the disclosure. Number two, this is not specific investment advice. The purpose of this segment or this program is to help long-term investors identify what could be attractive long-term entry points into a very risky but potentially lucrative asset class, Bitcoin. We use technical analysis. You can't value Bitcoin because there's no cash flow. It's very difficult to put a fair value on. So we use technical analysis. We follow trends, looking at what direction Bitcoin's trading in. We consider cycles. Is Bitcoin more likely than not, at a potential top or a bottom, or a topping or bottoming process? And we use other technical analysis studies, such as relative strength, to help look at the short-term momentum of Bitcoin and perhaps try to identify points where it may be overbought or oversold. We also look at normal distribution ranges. We look at trend lines, and today we're actually going to cover a little bit of ratio analysis, so a little something new. So without further ado, I'm going to share my screen. Going through our normal analysis of Bitcoin, looking at the studies, the relative strength indicator is the top study here in blue. We can see that earlier this week, Bitcoin did reach oversold conditions, maybe a slight positive. That's probably the only positive to look at this week. From a trend score, that's the next study here in yellow, the middle pane, very negative trends. And the cycle, the last study here at the bottom, Bitcoin was showing a potential cycle bottom here in the, I guess, fall time frame. And right now it is not indicating a cycle bottom yet. So by that measure, not a imminent potential turning point for Bitcoin's price. Bitcoin had been trading in a multi-year uptrend, broke out of this trend in the fall. It was trading in a tight trading range, which we've discussed in this program. After a slight advance out of the trading range, things were looking a little bit positive. Bitcoin, things got a lot more negative. And so last week we were sitting right at the low end of this trading range. And this past week, Bitcoin declined substantially. So we had moved Bitcoin back to neutral. We described how it was on the verge of negative scores. In hindsight, I wish we scored it negatively because it gave up a lot this week. It was a 25% drop in price to its worst point yesterday being Thursday. Looking at where we are here, not a lot of positives here. I mean, other than simply Bitcoin's half as expensive as it was at its peak earlier last year. When Bitcoin turns negative and there's negative trends, it can be substantial, and that's what's occurring right now. So we think that there's a big buying opportunity that's building, and it will hopefully present itself soon. But trying to jump in front of the bus when Bitcoin's declining probably doesn't make a lot of sense when you can simply wait for things to settle a bit. So where is Bitcoin going to settle? I don't know, but we can use a ratio analysis to give us a guess. So I applied a ratio analysis, and I basically measuring the entire up move from back here, in the 2023 levels. I measured all the way up to the peak late last year, and where we are today is a 50% retracement. That's an important level. The other magic numbers from the Fibonacci sequence, where we get important ratios that repeat themselves in nature, and they tend to help during market sell-offs and advances to try to find where turning points may occur. One of the important ratios is 61.8%, 0.618. If we look at that level for Bitcoin, if there was a 61.8% retracement of this recent advance, we would be at 57,400. So or 57,460 to be exact. So that is what I'm going to put out there right now as a potential bottom. So I don't, it would close below that level would be alarming for further decline, or I guess it would be a good thing for further decline, give us an even better entry point. But for now, the recommendation is to wait for Bitcoin to put in a bottoming process, to start showing some signs of recovery. Let's see those trends improve. If time can elapse, we might even get a cycle score. You might see the cycle indicate a potential bottom, and we at that point might be able to move scores back up to neutral or even positive. But for now, it's definitely a negative score on our scale of 1 to 7. We have Bitcoin in a 2. The reason it's not a 1 is that we do have the relative strength, like I mentioned. The first study has already indicated that's the first thing that would indicate a bottom, and that did show very oversold readings yesterday. So because of that, and because Bitcoin's half as expensive as it was a year ago, 2 years ago, certainly late last year, we have Bitcoin at a 2 out of 1 to 7. So 4 neutral, 4 is neutral, 7's great. We're at a 2. So we'll leave it there. We'll see what happens next week. See if the pressure on Bitcoin continues. If I mean, Bitcoin's not alone. We've seen some pressure on some other risky asset classes as well. Markets are showing some signs of volatility. Other issues going on with Bitcoin. MicroStrategy, which is a big holder of Bitcoin, might be forced to sell. And there's some other currency issues that are occurring. But nonetheless, we will wait and see what the future brings. And when we see things settle out, then we'll feel more comfortable signaling all clear or potential all clear for long-term investors to consider adding a position in this asset with a higher degree of comfort than is available right now. So thank you very much. Reach out to one of our advisors at grimesco.com, and we'll pick it up again next week.